I've seen this movie before. The time to be putting capital to work is when there's blood rushing through the streets. And that's happening in crypto right now.
Hey guys, welcome back to Library of Wealth. Today we have Shark Tank investor and Canadian businessman Kevin O'Leary discussing the crypto crash and how it can actually help build a stronger industry. O'Leary reassures us that even though there is a possibility of the value dropping in the crypto sector, the economic positions such as Bitcoin and Ethereum are decentralized all over the world, so it's not just American investors exposed. Even if Bitcoin went down another 20 points, it won't matter because Bitcoin is spread everywhere and most holdings are not institutional. He tells us that when those same institutional investors and sovereign wealth become involved, real assets will be able to be seen. Let's check out this interview with Kevin O'Leary as he gives us his take on the openings in the growing crypto market. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Right now, everybody's tacking left. Bitcoin down below 20,000. We have a slew of crypto CEOs that are resigning. We have consolidation in the market. Those are the signals right now. It feels pretty bad. Why are you bullish? What are the bullish signs that you're seeing?
I've seen this movie before. The time to be putting capital to work is when there's blood rushing through the streets. And that's happening in crypto right now. All of these bankruptcies, defaults, changes in management, it's a cleansing that's going on. It's a very difficult time to fund new projects, and any valuations that people thought they were going to get 4 months ago are being cut in half, sometimes down 60%. That's why a 20% allocation to crypto at this point, at these prices, is a very good idea. The reason we're stuck in a very low momentum state in crypto and blockchain right now is the lack of regulation that keeps the institutional investor out of this space. For all the excitement about stable coins and Bitcoin and all the projects and Ethereum on down and Polygon and Miston and everything that's coming, the truth is that none of it is owned by institutions, zero. And so everybody likes to say, yeah, that's not, but sovereign wealth and pension that I service in the indexing business, and there's many people that do what I do, we create indices so that they can invest capital. They are waiting for regulation before they index. And so if all that happened was sovereign wealth funds put 1% to 3% into maybe 6 different projects, it would definitely be some Bitcoin, there'd probably be some Ethereum there, maybe some Polygon, maybe a little Solana, whatever they want to do and what indexers would do for them based on market capitalization. That's $1 trillion worth of demand. But none of it is going to happen until we get some policy.
Kevin O'Leary advises recovering retail investors to go for large cap projects such as Ethereum, Bitcoin, and Polygon, and explains that it is impossible to pick the bottom. But he warns to be sure that if you are staying along that category, you will need diversification, because at the year's end, tax returns on crypto trading and income will cause substantial maneuvering on projects that didn't recover to take tax losses versus the ones that did.
There are countries that are advanced. There are places like Canada where they allow broker-dealers now attached to accounts, and Canadians can do that. They've got millions of accounts open now. The UAE, Switzerland, France. But the real money, the sovereign wealth capital, is never going to move against the SEC. Never going to happen. And the reason that occurs is that if you're a sovereign wealth fund or a country that's oil-rich perhaps, you're generating $250 million every 12 hours. The only place on earth you can put that is in the S&P. The only way you can do that is being compliant with the SEC rules. They are never going to make a move against the SEC in any way until these rules have been determined. So we are being kept out of institutional capital, and Bitcoin is not going to trade above $22,000 until we get policy. Interestingly enough, and this is a personal speculation, if this stablecoin transparency bill was passed first before the Digital Commodities Act, and Jeremy, wherever he is, was the guy that got that done, it'd be like bringing Led Zeppelin back, and he would be the lead singer. Because if that happens, and if it happens, I speculate that all assets, all crypto assets would appreciate overnight by 10% because it would signal the move for policy. Everybody is getting bored with the status quo. And the US has to wake up and get its poo-poo together and start regulating this stuff. So I'm not in the camp that says we need to place the original founders of crypto and decentralize and let's fight the government. Screw all that. We know that that's not going to work, and we know that no one's going to make any money if that's the case. That's a bad outcome. A better outcome is regulate the applications on the chains that should be regulated. The policy exists for some of it. Put policy out on stablecoins first. I hope that we consider Bitcoin and other token-based opportunities commodities. If there's, if we're going to fractionalize NFTs, maybe there are securities. There's all this stuff. But right now, what we have is turf wars. Turf wars between the regulators. Right this morning on CNBC. No, it's my domain. No, it's my domain. Of course they want to control it. But at some point, the role of the Hill and Congress is to decide, make a decision. It won't be perfect. In the case of stablecoins right now, what held up that bill were the states. They're not happy. Well, tough. We got to get this thing done. And we got to move on. And we can tweak it, but it's very frustrating at this point. And I think I speak for a lot of people the same way from the institutional side. It's time to get our act together. I've put money in harm's way in crypto across now almost 50 projects and continuing to do so every week because I'm in the camp that says in the next 12 months, something's going to break on policy. I think it's going to be the Stablecoin Transparency Act first, but that in itself should open the floodgates because if you ask a big, let's just take a big Middle Eastern bank, I don't have to name the names, but they've got 5 million accounts with over $2 million in each one. And they want to just have access to a stable coin, Bitcoin, and one chain. And they want to offer that to their clients. They won't do that until there's regulation.
There's no compliance infrastructure at the moment.
And they are getting ready for that to happen. Now, if all of a sudden stablecoins backed by US dollar were regulated entities, that would open up within 90 days. And so as an investor, I say to myself, do I position myself now or do I wait for the regulation? Because when in a nascent industry, and I happen to believe, and I've said this multiple times, this sector will be the 12th sector of the S&P in 10 years. It will be.
O'Leary says that crypto policies, even only on Ethereum and Bitcoin, will bring in capital. He has seen that the sovereign wealth wants Bitcoin and the volatility that comes with it. In the short term, the demand is for 2 to 3% portfolio average. Sovereign wealth has very decentralized assets in their portfolios, and because of this, it will take a while for indexers to want to purchase Bitcoin. O'Leary believes if regulations were immediately put into place for Bitcoin, its value would skyrocket. What do you guys think about Kevin O'Leary's take on the economic framework for cryptocurrency? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.